Hey, what's up everyone? Welcome back. In today's video, we're going to go over Ethereum Classic. So Ethereum Classic right now is trading at $32.35. Taking a look at a snapshot of the weekly time frame, we are kind of playing this out and we will monitor this day after day going into next week. Is this candlestick here I mentioned in the last video, which does check off the characteristics of a hammer candlestick, which is observed at the very top and treated as a reversal pattern itself. So the body here we see, however, what we do want to pay attention itself is the wick. So the wick at the very bottom is twice the size of the body. If we see an extension further more of the body itself, then it does stop the characteristics of a hammer candlestick. However, it does weaken this overall uptrend because we do see the surge in terms of the sellers itself. Going into next week will be a confirmation if this candlestick, hammer candlestick, is valid, if the price does close below the body. Taking a look at some of our RSIs or our indicators here, the RSI itself is still considered as overbought here at 67% from the previous high. So we are still seeing that correction, that pullback, because the price itself and the conditions were considered as overbought here. And of course, our momentum indicator, which is our MACD indicator, with these histograms getting smaller in size or these bars getting smaller in size and lighter, it is showing us a cool down from that original uptrend. Now, interesting enough, we're going to take a look on the daily time frame because there's a few things that I do want to cover in here in terms of our candlesticks that's showing us that correction. So if we take a look closely here, we do see a potential candlestick that is characterized as a shooting star candlestick, where the body is mainly at the very bottom here, and there is either no wick or just a small wick at the very bottom, and the candlestick wick is twice the size of the body. So this momentum shooting star candlestick observed at the very top shows the momentum slowing down in terms of the bulls, followed by the confirmation of a spinning top candlestick where the candlestick wicks are equal on both sides, twice the size of the actual body, and the body is very, very small. Now this again is an indecision of the marketplace. If we do pair off the previous candlestick, weaken the momentum of the bulls compared with the shooting star candlestick, and a close of the next candlestick that we see was well below the previous candlestick. This candlestick is known basically as an engulfing candlestick where the body engulfs the previous candlestick. So with these three combined, the price itself is going to come down in a correction field. So if we do see the next area of the price confirmation or the price area of support, we can rely on our 61% of our fib. What this may confirm is a downwards trend because we see the price is around our 20 moving average. Whenever prices close below moving averages, it may show us signal signs in the future that the price is doing a reversal itself. And where we see the 61% of our fib, this is kind of a golden ratio or golden ratio for the price itself. Price may bounce here and find support. What we saw previously going into November or the end of November, early December, a lot of our candlestick wicks at the very bottom here, and the price found a really nice rebound and a nice support. So a retest of this area of support may happen in the next couple of hours to come, to the next couple of days. Now, if we take a look at our momentum here for our MACD indicator, momentum is building quite strong. Again, when we analyze those three candlesticks going into this next area of support, depending on how strong the momentum is and how strong the bears may take over, the price may not find this area of support and come down to the next area of Fibonacci around $28. Taking a look at the immediate short term here for 4 hours, we have seen that Ethereum Classic had broken out of that area of consolidation. Just means that the price moved from side to side, from resistance to an area of support. Now, this is the area of support is being treated as an area of resistance now. So it does test the theory of resistance turns support, support turned into resistance. A few of our candlesticks here has been rejected from the immediate resistance of the $33.09. And we may see the price continue to drop to the secondary line of support, which these candlestick wicks from the previous break from this consolidation make occur. So the resistance, or sorry, the support itself may come down here at $31.96, depending on how strong the momentum is for the bears. It may break this line of area of support and come down to $31, which is our next area of Fibonacci. And if we scroll out a little bit more, we can see back here on November 28th, going into the early December, this was an area, a key area of support where price bounced off very nicely. So there is another indication, if we take a look at some of our indicators, some bearish signals as well. We see possible signs of the RSI dipping below our signal line, which does trigger a sell signal itself. And of course, the MACD indicator here is getting darker in the color. We see our MACD line below our zero line. So we know for immediate short term for 4 hours, we are in a bear market. So depending on how strong this bearish market is, we may dip below this candle, this area of support. And if we take a look at some of our candlesticks here, we can potentially see this spinning top candlestick observed at an area of resistance. So we're going to see that natural pullback coming down to that area of support. But that's kind of my analysis here for Ethereum Classic. Thank you guys so much for watching. Like and subscribe as well, but I'll see you guys in the next one. Bye.